Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Tilray Brands, ticker symbol TLRY. And so here I am recording this on Tuesday, October 1st, after the market has closed. And Tilray closed at a price of $1.68, being down about 4.5% on the day. And so what I wanted to do in this video, which is really going to become a series, I wanted to follow Tilray over the course of the next week or so, leading up to and perhaps following earnings, because I kind of was presented with the chart during Ticker Request Live on Sunday. I hadn't looked at it in a while, and some things did stand out to me. So thanks for the request. I forget who requested it, but yeah, I'm pretty intrigued by it with earnings coming up and just looking at the unusual whales data. So for these videos, I am going to try to go over Tilray every day after close, go over what happened in the chart on the daily time frame. So I don't want to get into the nitty-gritty, but just looking at the daily chart, and then look at the unusual whales options data, and then kind of explain what I am doing with a trade I'm partaking in, which, I say it in tons of videos. I'm a little fish. I don't have a big position in it, but I kind of wanted to track this. This channel is effectively a trading journal for me. And so I just wanted to track this trade on a daily basis because I want to get more familiar with unusual whales data. And I think doing this series on Tilray will be beneficial in that. And so, just looking at the chart, I did do a video on Tilray earlier today, so I'm not going to get into it too much, but building upon that video, the things that stand out to me, $1.70 or $1.79 because I like to have fun with it. And then also, about 160 being a stop loss level with the possibility of, maybe re-entering around 150 if it finds the bottom there, or perhaps lower. But also, with that just being a level to manage risk right around 160. And, then there's upside potential like to $2. I feel like Tilray is likely to break out based on the unusual whales options data, but I could be wrong. And so that's kind of why I want to document this. And towards the end of the video, I will share the positions that I have, which again are very small. And, maybe got something in my eye. Maybe I lose some money on this, but, it's money that I'm willing to risk. Ideally, with my risk management, I will not be losing that much money if I do. So yeah, I just wanted to go over that. And so with the chart here, we did come down, closing at 168, as I had mentioned. It does look like we have broken below this uptrend, which is based on that low of 150 from August 12th, as well as the low from September 26th. So that is how I'm drawing that line. We closed below it, but it is just one close below. So my understanding of a confirmation, that would be a close lower than this low of 168. So if we do get a close below that tomorrow, maybe this is confirmation that it's breaking lower, but I am just going to go with my level at 160. And yeah, but I think that this is likely to break out largely because of unusual whales data. So I wanted to go over that with you guys. And this is stuff that I am learning how to use. I'm getting more familiar with. And so, yeah, I'm just going to walk you guys through it because it's helpful for me. It's also helpful for me in getting more comfortable talking about this data to better inform for other tickers, future videos, and whatnot. And so here, what I am looking at in Unusual Whales is the overview of Tilray Brands, ticker symbol TLRY, which is currently trading at 169. And this is the options volume, and so it's call and put volume. Looking at one day, so just today, which is October 1st, and these are 5-minute candles. And so the takeaways from this, or what I really like about this kind of chart, is that it shows, whether it's lots of green or lots of red, it has that information. And so the green corresponds to calls, the red corresponds to puts. And so from this, we can see there's a lot of green. So that makes me think a lot of people are bullish on Tilray. And so that's good. I want to be bullish on Tilray. And so the other information that we can pull from this, so for the day, 33,000 contracts were traded today, which represents a premium of about $500,000, over $500,000 traded today with a net premium of 42.5 thousand. So that premium is going up, meaning there are more contracts. So that's, either good or bad, depending on if you're going long or short. And since there is a lot of green here and there's a net premium increase, that means that more people are going long. So I think that's good. But at the same time, only being 42.5 thousand, that is, like 4 YOLOs. So it's like if you get 4 degenerative gamblers in a room together who want to YOLO 10,000 each. That's what a YOLO is. That's what this net premium increase is. So, maybe it's not that substantial. So this is very risky. And I should note that earnings are a risk, that options are risky, especially around earnings. And so I'm really just doing this to provide more information, some more data, and because, I think that options are really interesting. But then anyways, looking at the data up here, we can see that the put volume was less than 3,000, whereas the call volume was over 30,000. So it seems like a lot of people are trading calls. And with the premium going up today, that tells me that more are buying calls. So I think that is pretty good. And then we can look at the premium for puts. It's about $62,000 traded today, whereas it's almost $500,000 in premium traded today on calls. But again, that's only a net increase in these contracts of about 42,000, with the total, being about $500,000, majority of that being calls. So I think that this is in the favor of the bulls. And actually, if I do remove myself for just a minute, we can look at some of the data, or actually maybe I can just scroll up. Yeah, I'll just scroll up. That's probably a better way to do this. We can see that just above me, we can see that the sentiment is more on the bullish side, even though it's less than 50%. A portion of that is neutral, and so that does suggest that the favor is in the bulls. Also, some other data that we can look at up here. I'm not going to go through all of it, but just some of it that stands out to me. Put to call ratio is close to 0, so majority are calls. The put volume, like I had mentioned, less than 3,000, whereas the call volume is over 30,000. And the total volume traded today, it looks like, let's see, the total. See, I'm still learning this, so bear with me. The total volume, 33,000. That should be reflected up here. Yeah, up here, right here. Total volume, 33,000. So that is correct. And not that, the website's correct, that my understanding of it is correct. 33,000, that does check out. Then put premium, we have here almost 63,000. And let's see, that's matches there. And then the call premium, less than 500,000, matches right there. So that's all good. And so, I think that this is really looking nice. But then if I do adjust this to look at the past 7 days, these are now the 30-minute candles. We can see that yesterday there was this pretty big candle, which represented over 25.7 thousand contracts with, let's see, I'm scrolled up, so I'm just making sure I'm reading this right. The majority of those contracts, virtually all of those contracts being calls. And so that represented a candle premium of about over $250,000, so a lot there. And then, while this data up here is just for the day of today, October 1st, this data here is for the past 7 days, as I am showing 7 days worth of data up here. And so what we can see is that the put premium traded, the put volume traded, the number of contracts, is less than 14,000, whereas the call volume traded is just under 200,000. So, an order of magnitude more contracts traded that are calls. So I do think that is good, which does represent about $2.4 million in premium, so a lot there, whereas the puts, that's like an order of magnitude lower than that, 274,000 in premium there. And the total premium traded over these, just for that one day. And so this is just daily stats over here. So yeah, and then let's see, looking at just scrolling down here, actually these hottest contracts here, I do believe I have them on the next tab, which is going to be, full screen. So I'll go over that in just a second. But one other thing I did want to show is the net premium. I see these graphs commonly shared on X. And so this is one that, is showing the past 7 days, so it can be a little bit confusing. My understanding of this is that we have the price of the Tilray shares in yellow here, and that y-axis is over here. And so, price went up yesterday, and then price came down. And with that, premium for calls, which is in green, has gone up. And then you see this kind of gap down here, but it effectively stayed flat over the course of the day because this is all relative. And, as far as my understanding goes, and so, it came down initially, but then it went up over the course of the day. So that suggests to me that the sentiment is overall bullish, whereas with puts, which are in red, we see that premium more or less being flat and actually coming down a little bit. So that does make me think that this is, more bullish. If I do switch this back to the 1 day, this is how I commonly see these graphs on X. And so what we can see is that the price came down today, but the call premium went up. So that suggests to me, maybe I'm misunderstanding this, but that suggests to me that people are buying the dip here with these calls, whereas people are getting weak hands with the puts. They're tossing them. Maybe that's the smart people, though, whether it's smart money or, whatever you want to say there. Maybe these people who are trimming these puts are cutting their losses before it goes down lower. So that is quite the possibility. And then so also, because you guys might be interested in them, I'm just going over some of the hot contracts in Tilray. Also, this is, data that is useful for us. And so what we're looking at here, and I should note too, all of the times that are presented up here are going to be Central Time because I'm in the Midwest. I apologize if that's confusing, but I don't know how to adjust it on my computer because Unusual Whales is using my computer's time as far as I understand it. And so anyways, what we can see, these hot contracts, these are going to be the ones that I believe are traded with the most volume. I could be incorrect with that, but if I go back to this graph, this is hottest contracts, highest volume, and so that is what I have over here. And I'm actually going to refresh the page just in case there was some new data that I missed. And so the hottest contracts are, all calls. Let's see, the top 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So the top 13 contracts are all calls. Sorry, I counted out loud. I'm probably not going to edit that out. But really, I just want to document this, and I will get more streamlined with these videos as I do them daily. But, I am learning as I go. And so, like I said, the top contracts are all calls. And if we look at the bid to ask volume, it does look like it is mixed between bearish and bullish, and actually the top two are looking more bearish, so something to consider. And so one of these contracts I do have a position in. That's actually this one, which I will explore in just a second, the data on that. And that is the $2 call with the November 15th strike. And so I'm interested in that because it gives me more than a month to either cut losses if I'm wrong or to, hold for a swing. With earnings coming up, I am looking to potentially swing for 100%. Which I don't typically do with contracts as I am still learning all this stuff. And if I, hold for a really long, for a big swing, it may not go that high and then I end up holding too long and it sucks. And so what I try to do typically with contracts, what I've been doing that's been successful is I swing for 20% and then if it comes back down, I buy back. Rinse and repeat. And I've been pretty successful doing that with GameStop. So I'm going to be trying to do that with Tilray, but ideally I will be holding this contract for, beyond earnings to see if it does spike up. But anyway, so this call, $2 strike expiring November 15th. And so that is the one I'm going to explore today. And that actually looks like, all these ones that are dated with the expiration October 4th, October 18th, it's getting a little soon. We are in October now. Those have been more on the bearish side, maybe because we're getting close to those dates, especially with October 4th being just a few days from now, 3 days to expiration, DTE right there. This one's 17 days, so a little bit safer. This one, this is expiring January 16th of 2026. So that's quite some time from now. That looks like it's net neutral. So maybe not such an important one to be paying attention to. Because it's also, dated more than a year from now. Speaking of a year from now, January 17th, 2025, it does look like this contract was net bullish, with the about 3/3 of the contracts being on the ask side or being bullish regarding Tilray. So that does actually look pretty good, but that's dated, until January. We also have one that is dated 10 days from now, expiring 10 days from now, October 11th. And so that's also the $2 strike. That one looks more bearish, so good to think about that. And then we have one that's dated a little bit longer than the monthly contracts, which are October 18th. That is October 25th, 24 days from now. And that is also more bearish. So good to take that with a grain of salt. If I'm talking about being bullish on Tilray, it does seem like there are a lot of contracts that are bearish. But then, or people who are taking the bearish position. But with this one, November 15th, majority does look to be on the bullish side, and that's 45 days to expiration. So it does seem like a safer bet, but it's also not so long waiting for January. So I find that one to be interesting. That's the one that I do have a position in. And so I am going to explore that contract because I am interested in it, because I'm holding it. And so this here is the $2 call, a $2 strike call that expires, pop-ups keep getting in the way, November 15th, that you can see it right there. And so what we can see for the day, for this contract, for the day of October 1st, volume is, this makes me a little nervous because it's 1.666 thousand. I'm not necessarily superstitious, but I know people are, and that kind of makes me superstitious as a result. So maybe that's a bad omen. I don't know. But anyways, open interest, about 18,000. And let's see, the volume traded, so it's about, let's see, that's 10% of the open interest. So not double, not the same amount, but it's 10%. So that's not nothing. And the premium traded today was about 16,000. Again, that is in the realm of YOLO premium amount, around 10,000. But this is also dated, more than a month from now. So I don't really think this is YOLO volume. I think this is probably more people like me who are looking at this and thinking about it. And so what we can see here from these candles, which are 5-minute candles for the day, showing volume here. And so this is showing that the largest buy here was at a fill of 10 cents. That's $10 per contract. And that's about $4,000. So not an excessive amount. It's not crazy. And so this doesn't really get me like, ooh, I need to be jumping into this position. This just gets me thinking, this is data. It can inform me on the contract that I hold. So that's why I'm interested in it. And the other graph that I did go over is this one. This is the net premium like I showed previously, but that is just for this contract. And so what we can see as the price of Tilray has come down in yellow. Let's see. No, this is net premium, so this has nothing to do with this individual contract. This is all of the contracts. We see that the premium of calls going up over the course of the day as the price comes down. So that makes me think it's pretty good. And then we can also scroll down here to look at this data for the day or for the days. Let's see. Yeah, this is historical. I think I need to scroll over to the left. Still learning. Yeah, so I'm going to scroll over here. And yeah, I just tried to include all of the data that I find really important there, or at least that I'm familiar with checking. But some of it, like this volume that takes up some room, maybe I want to omit that. But anyways, okay, so now I'm at the top again. I'm just trying to scroll without... there, I want to keep this at the top. So October 1st is right there. And so what we can see is about 1,700 volume traded on the day with the open interest of around 18,000. And it looks like we got an increase from yesterday. in the open interest of about 3,000 contracts. So that makes me feel pretty good. This number is going up. We did get volume today, like I said, of about 1,700. And then going back up to here, it looks like, let's see, majority were on the ask side. And so these are calls. So the ask side is people are going long, whereas not much lower than that on the bid side. So it's kind of a neutral day. So I don't really expect this open interest to change much between today and tomorrow. I think it'll go up a little bit, but not that much. And so here we can look at these other days. It's been going up pretty steadily, or not necessarily steadily. It's been going up really since the 23rd. That was the last day that it actually went down, but only by 400 contracts on the 23rd of September, I should say. But yeah, so there is that data, and it does seem like the majority, in the past couple of weeks have been bullish. There have been some days, this one's more or less neutral, 47% being the majority on the bearish side. Here, 83% being majority on the bearish side, and that's when it did go down. And then here, about 72% on the bearish side, and that day it only went up about 32 contracts. So yeah, I mean, this one seems pretty intriguing to me because price is currently trading, not terribly far away from $2 a share, although, it is, let's see, more than 10% lower than that. So, maybe that is something to factor in. But yeah, I mean, I think that with earnings coming up, it could be going towards 2. Especially if we look at the chart over here, that there is this gap at 199. So I could see it breaking out, although it did get rejected from this downtrend yesterday, and it does look like we closed below this uptrend. So, maybe that is not looking so good, but it did find some support. It looks like it closed. Yeah, so I mean, actually, I should take a step back. We closed below this uptrend, but maybe this uptrend is not that significant. I think, this purple trend line, actually goes back to $1.50, which we recently hit here. And so I could see that uptrend as being significant. But maybe, since I do have it on a low here, what I might actually do is I'm going to add another trend line, but go into, let's see, the lows over here, because I think that, might be a good level to be keeping our eyes on. And I'm going to color that purple, but I'll make it dash, but I'll keep it a little bit thicker just so. Actually, maybe I want to make that one solid, as like that's like the bottom line for this. And this one's dash. Maybe it can test that. And so as you can see, that secondary kind of trend line goes back to the low from June 26th. And we can see over here that we did get one close below it, but then we bounced from there, going up about 16%. So I could see that, we're really only testing that upper trend line. We could still be coming down to, let's see, right around 165. And so that is still above the, stop loss level that I personally have placed at $1.60. So right around where the cursor is, right here, right around there. So that's kind of my risk tolerance for this. But yeah, on the note of risk tolerance, at the end of this video, I am going to go over the very, very small, perhaps comically small position that I have. But that's kind of the way that I choose to learn this stuff. I'm not that great at managing around earnings or around options, so I'm choosing to go small. And I should be clear, this is for a swing trade. I don't plan on diamond handing this. So these are the positions that I have. Perhaps it's super nerdy. I keep track of all of my trades in a spreadsheet, and most of my trades are pretty small. But I try to go for percentage swings. And so, yeah, for this, ideally, I will swing these contracts and these shares for getting up to $2 a share and then reevaluating and probably trimming up there. And so what I did is yesterday, I bought one contract that is the November 15th expiration $2 call, which I just went over the data for that. And I bought one contract at 14 cents. My fees are 5 cents for buying contracts. And then today I bought a couple more contracts, one at 12 cents and another at 10 cents. I had a limit buy at 9 cents. I actually still do, but that has not been filled yet, and I'm probably going to leave it. I have to note I am at work today, tomorrow and the next day, so I'm going to be pretty passive with this. And so because of that, I have limit sells placed, one for a 20% swing and another for a 30% swing, and then I would hold the other contract for a potential 100% swing based on my first buy, which would be up to 28 cents. And so that's how I'm managing stuff, because I can't be looking at this when I'm at work. If I wasn't going to be at work, I'd probably just leave this with no limit sells because the expiration is far out, but just for me managing my risk. And then, for me, again, this is not something long term, but I did buy only 10 shares, so a very small position at 169, and largely did this because I want to be keeping an eye on, this limit level. So I have a stop loss set at 160 with these 10 shares that I have. And if it goes down to 160 and that I get stopped out, then I say, I need to reevaluate these contracts that I'm accumulating, and maybe I need to cut my losses. I will evaluate then, because I may very well be wrong about this. But yeah, I just wanted to share that, and I will update this on a daily basis because I find that pretty important for me to be updating my trading journal and to be following through with this, and also to reinforce my learning of the utility that Unusual Whales has. And one thing that I did want to note, I was contemplating, because I had, let's see, I'm just going to pull this up again, because I had buying these incrementally based on 2 cents lower, psychologically, or, keeping up with this pattern, I should say, the next buy would be 8 cents. But looking at the data here, the low for this contract has been today 9 cents, the 30th 9 cents. The past few days, the past 4 trading days, the low has been 9 cents. So that is why I have a buy there. And then, it wasn't until previously on the 25th that it was 8 cents. So I have a buy placed at 9 cents. Maybe actually looking at this, I might place another buy at 8 cents. And then, I would then be trimming at, 20% profit or whatever. I would be adjusting that if this does get filled at work. But I think that this is a pretty safe bet. As you can see, with the calls, I'm risking $36. With the shares, I'm risking about $17. And I have a level that I will cut losses with this, and that will inform on what I do with these. But ideally, I'll be holding all of this through earnings on the 10th, and maybe I lose, $100. Maybe this ends up being $100 in the end. Maybe I lose it, but I'm going to be cutting losses before stuff goes to zero. And, I haven't even accumulated $100 worth yet. So, that's kind of what I want to do. I'm going to try to do more casual, more short videos like this every day to just document my journey with Tilray, because, I think looking at this options volume with the 5-minute candles going back 7 days, I think this looks pretty good. I think this looks like it's a dip buying opportunity. And looking at the chart, we haven't hit, all these levels. While we close below this one here, we close below both of these purple trend lines on, let's see, the 6th. And, we had a rally following that. And so maybe we see a rally, a breakout up to $2 following earnings. And so that's what I'm hoping for. But if I am wrong, I'm going to cut losses. I'm not going to diamond hand this. And so I wanted to share that with you guys in case it's helpful for you. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more content like this. Thanks a lot for watching. Take care, you guys.